Hey guys, Stock Saturday, and it's a happy Stock Saturday again, outperforming the market slightly, about 3.6% up this week, largely due to sort of a couple of crypto stocks mainly, which we'll come to. But yes, the S&P has been up 0.67% the last few days, the last 5 days, and the Nasdaq up 1.25%. So yeah, about double the S&P, but yeah, 3.6%. Really happy with that. It's sort of, as I say, not really come from these stocks, although Broadcom making new highs. That's performing extremely well. I think about 560%, including FX impact. I think I'm positive on FX impact, which isn't the easiest thing to do in the current times with a dollar stock. TSMC 240 also doing really well, and Vanguard Emerging Markets hasn't been sort of pushing above 50 for all that long. We're now sort of 51.60. So yeah, some of these stocks pushing on as well. Evolution got a nice little bump as well. We'll come back to their earnings possibly next week or shortly. Obviously not a huge position, but I do like to cover them because it's one I would consider adding to in the future. But yeah, let's have a look at some news. So we saw this from Coreweave announcing another $6 billion AI center in Pennsylvania. Possibly means that sort of AI deals for the crypto miners, certainly from Coreweave, might be a little less likely. But on the flip side, it means there's clearly more data center demand. They noted Google announcing a $25 billion data center and AI infrastructure deal, pledged $3 billion to upgrade hydroelectric power in Pennsylvania. So yeah, it's all go, and there's, I guess, potential for one of the sort of hyperscalers AI companies to come in for someone like Iron, Riot, Cipher Mining maybe, or some of the others. So yeah, that was interesting. Coreweave sort of hasn't, well, it popped. They're saying stock popped after that news. It went up on Tuesday, but has since come even further down. So it's kind of taken Core Scientific with it, because Core Scientific is essentially now not tied to Bitcoin unless they sort of reject the deal. But yeah, basically they just get an eighth of a share of this. So if it's down 5.7% in the last 5 days, you're getting an eighth of a share that is down 5.7%. Doesn't really matter what Bitcoin's doing, as I say, unless they want to reject the deal, which who knows. But it's that time of the quarter, on to TSMC, and pretty strong results as expected. Looking at their balance sheet, it was post this first. It's sort of looking pretty good. Cash and current assets sort of in general is slightly down, but nothing too much. Cash down sort of 30 billion Taiwan dollars, but coming down to non-current assets, property, plant, and equipment down. I'm guessing this quarter hasn't been a heavy sort of building quarter, I suppose. But looking at the debt side, current debt increased about 33 billion, but non-current debt decreased by 100 billion. So yeah, overall, see that as pretty good. Cash come down a bit, current debts come up a bit, but long-term debts come down a bit. So overall, um, you know, balance sheet has improved a reasonable amount. And income-wise, sort of knew this would be good because we've already had all three revenue months, and yeah, revenue was surprisingly strong. 11.3% just on last quarter, and yeah, 38% on this quarter last year. So very, very strong. And as we've been having before, cost of revenue is not increasing as much as revenue is increasing. Admittedly, well, slightly more on the quarter, but cost of revenue's up 22.5%, where revenue's up 38%, because everything they're doing at the moment is just more profitable. Looking at operating expenses, R&D up 61 billion, fair enough. SG&A though down quite a bit, down 18.9% on much more revenue. So I would imagine that could be a bit of a one-off. It's up slightly from last year, 4.5%, but that just does absolute wonders for profit. So been a very strong quarter. Looking just coming down to the more sort of net profit, although you did have net interest expense. Net interest income in their case, 21.5 billion, slightly down on last quarter, but up from this quarter last year. And then, huge tax bill, unsurprisingly, because they've made a lot of profit. Net income, 397 billion, up from 360, 10% up, and 60% up net profit on last year. So yeah, and there is some other comprehensive losses. Sort of trying to dig into what that was, but couldn't find anything. It's sort of one of three things really. It could be unrealized losses on a part of the business maybe that they're selling. It's not, well, it's a reasonable amount. It's sort of 2/3 of a quarter's profit. Could be sort of increased liabilities on pension funds. Certainly had that. Would imagine more employees for this increased revenue. It is increased wafers as well. And yeah, so it could be increased pension liabilities for the future. That sort of goes in as a one-off adjustment. It's not actually a cash loss for this quarter. Or it could be FX. Hedging, and the Taiwan dollar sort of had quite a move. So if it's FX, that wouldn't really bother me at all. So yeah, we'll have to see. Probably won't see that what that ever is. It just sort of feeds into multiple quarters, multiple years really, and you don't really notice it. So just coming over to the presentation, they always like to compare the quarter to their previous quarter's guidance, and yeah, it's looking very strong. Revenue above the top end of guidance. Gross margin sort of pretty much at the top end, and operating margin also above the top end of guidance. So pretty strong, and pretty much all. Gross margin slightly down, operating margin is up, and yeah, both significantly up from last year. So very strong. Net profit is the one I always like to see, even though it's volatile and it's affected by sort of lots of things. Like to compare net profit over time, and yeah, 42.7%. Down ever so slightly from last quarter, but well up on last year. And 42% for a manufacturing company is absolutely crazy. So yeah, very nice. You get sort of software companies like Microsoft and Meta, have lower net profit than that, and they're not really making a great deal. Obviously, they both make some stuff now. Meta with their goggles and all sorts of things, but mainly software companies. So if they're at 30 and TSMC are at 42.7, I'm a happy man. And oh yeah, I did mention the number of wafers up very significantly. 3.7 million, up from 3.2 and 3.1 this quarter last year. So yes, remarkable. Looks like most of the gain, interestingly, in this quarter has been in 5 nanometer rather than 3, obviously compared to sort of last year and earlier, certainly earlier last year. 3 nanometer was a very small portion, and it is now, this large red candle. But yeah, it looks like the gain certainly is on 5 nanometer. So yeah, for whatever reason that is, it's all good. It's good to see the slightly older stuff doing well. I presume it's easier to get, yields and success rate on the 5 nanometer as opposed to 3, just more difficult to work with. Revenue by platform, so that the DCE is the sort of consumer electronics side, if I'm not mistaken, is a absolutely tiny sliver at 1%, so being up 30% doesn't really make a huge difference. HPC, AI stuff up 14%, and that is by far the biggest segment. Smartphones up is a little bit sort of little bit of a strong point, I suppose. Smartphones have been sort of very up and down. Internet of Things 14% up, a bit surprising. Automotive as well, I sort of expected that to have done slightly better, but there we are. And then guidance for the third quarter. Revenue, they're expecting to be particularly strong. 30.07 billion for the second quarter, and they're saying 31.8 to 33, although not all translating into profits. They're expecting quite a bit more change in the new Taiwan dollar, so that could impact things. That could be why they're sort of forecasting slightly lower gross profit and operating profit. These were sort of in the mid 58s and 48%, was it? Gross profit. 40 operating profit 49.6, and they're saying 45.5 to 47.5. So yeah, a little bit. I won't say disappointing. I suppose they're still growing remarkably quickly, sort of on the high side of this, 10% a quarter, which is crazy. Future outlook as well, 2025 revenue to increase by 30% in US dollar terms. So very, very nice. And the recent major events, not huge amount. Advancing semiconductor research. You've always got to be looking at the future talent as well. Dividend $5 new Taiwan dollar cash dividend, fair enough. And the A14 process to, I guess, compete with Intel. Intel constantly saying that they're going to, catch up and overtake TSMC with their sort of 18A, 14A process, but never seem to quite get there and sort of get the decent yields that TSMC do. It's always the future. Looking at Blackrock as well, one that I would be sort of quite keen to add to at the right price, although I will maybe sort of just consider paying a little bit more if I'm sort of selling potentially overpriced and euphoric crypto stocks or crypto itself. Then yeah, paying a little bit over the odds for Blackrock isn't the worst thing. You could sort of accept a bit of a drop, to sort of take the risk that things just carry on going up forever and ever. But yeah, things looking very good. 152 billion of year-to-date net inflows. That's a ridiculous amount of money, really. 68 billion for the quarter. Everything looking rather nice. 375 million of share repurchases, and they made an acquisition, HPS Investment Partners, on July the 1st, so it doesn't go into the Q2 results. I'm sure we'll see maybe some adjustments and goodwills and write-offs and all sorts going forward, but yeah, long term, that's obviously very strong. Adds 165 billion of AUM and 118 billion of fee-paying AUM. So, yeah, very, very strong. AUM, everyone talks about BlackRock being, an 11 trillion asset manager, largest in the world. Yes, they are that, but it's 12.5 trillion now. What's 1.5 trillion between friends? Average, as you can see, 11.9, so it's sort of rocketed up from basically 11.5 to 12.5 in that period. So yes, rather crazy. Revenue up 13% from this quarter last year, 5.4 billion, very strong. Operating income down slightly, although net income up 7%. Looks like there's some adjustments that they've made from that. I'm not sure whether that's related to the acquisition, but we'll have a look. And yeah, I always like to check the net profit because they don't give it as a percentage. But yeah, net income over the revenue 5,423. 29, almost 30%. I'll take that as pretty much 30%. Very happy with that. And then, yeah, adjusted operating income, 2.1 billion basically. And yeah, operating margin 43%. So I don't do, adjusted net profit percentage because, that's just sort of some adjustments they like to make, but I'd rather sort of smooth out the actual net profit over time, so you're not getting one quarter's sort of negative adjustments, but you're also not getting adjusted numbers all the time. This is interesting, the breakdown of flows. So we have been hearing sort of institutions getting out of the market in general and retail sort of buying in, and I think this really does sort of highlight that. So you've had 28 billion inflow into equities, 4.6 billion out of fixed income and 6.7 out of multi-asset. So yeah, not doing too well. You see that is bonds in part, certainly. Private markets, some money has been going into private markets. Alternatives, 9 billion. 9.7 billion in total. Digital assets, even bigger than alternatives in total. It's more than fixed income and multi-asset outflows combined. So that's interesting. 14 billion. You can see why they're promoting it. Certainly. Cash management as well. People sort of just selling out of the market and parking their cash with BlackRock. Interesting, but yeah, results by client type, ETFs 84 billion, and yeah, institutional, some money going into active, but a lot of money leaving the market from institutions, 47 billion, and presumably the 84 billion is largely retail, so that's quite a lot. They note as well amortization of intangible assets of 98 million from the previous acquisitions that they've done over the last sort of couple of quarters, GIP and Prekin transactions. So yeah, there's always something to be digesting. They're always going to be making acquisitions. It's nothing like Broadcom, as I call it, sort of digesting a pig, snake digesting a pig. It's not $60 billion acquisitions, compared to BlackRock's size, what they're buying. It's relatively small and sort of incremental acquisitions, but still has an effect on net income, of course. And here's your adjusted operating income, of course. So 137 million of amortization in this quarter. And 76 million of acquisition related compensation. So yeah, could be paying off people that they don't think they currently need, or sort of paying extra signing bonuses and things that for people they do want, and sort of 10 million in transaction costs related to the acquisition. So it's similar to how I sort of look at Broadcom, basically sacrificing a little bit of short-term cost to buy these people, and yeah, that'll gain you profit in the long term. So yeah, all good. Although I don't, take it as 2.099 billion. 2.099 billion operating income, because these costs are there. It's what it costs to make the acquisition. So Yeah, I tend to just look at net profit over multiple quarters rather than adjusted profit. So looking at some economic news, we got quite a bit this month. US CPI, sort of people were fairly happy with that. Core up a little bit from last month, but not as much as expected on the monthly and the annually. 2.9%. It's not where they want it to be, but yeah, could be worse. Headline CPI did increase 0.3% for the annual. Was expected 2.6, 2.7 came out. So yeah, bit of a mixed bag, but not hugely promising overall. Similarly with not similarly with the UK. The UK was a lot worse. Basically, bad across the board, which is green, of course, with CPI. 0.4% core for the month, 3.7 for the year. That's way off the 2% that we want to be at. I do agree with a lot of people sort of saying that we've probably just got to accept we're not going to get to 2% in this sort of fiscal dominance, heavy debt environment. So you would have to sort of kill the economy and basically have at the very best case scenario, a mild recession to get to 2%. So is it worth that? Basically, a lot of people are saying no. You had the EU CPI, you sort of get their provisional numbers a lot earlier than this, and these are confirmed. Nothing sort of really changed. 2.3% core CPI. UK job numbers as well, sort of bit of a mixed bag. Unemployment claimants up, unemployment rate up to 4.7%, but the sort of non-farm payrolls, if you like, figure that we have, 134,000 jobs increased. So a lot of people talking about this number sort of being at odds with all of the rest of the data, basically. I think you had HMRC payrolls down, and it's been down sort of 7 months in a row. Looked like the rate of growth, has been down sort of for the past 3 years. It was going down all during the sort of last couple of years of the Conservatives' time. So it's just sort of carrying on that decrease. Can't put this all down to Labour, as a lot of people do. Worth noting as well that this is a mix of May and June data, but earnings increased 5% year on year for May. Still want that lower. Again, sort of debate about whether, like, if inflation goes up, should you be demanding a pay rise to sort of pay for that inflation? Does that pay rise then, across the country sort of cause more inflation, and it's sort of a reflexive doom loop, if you like? I kind of think take a little bit of pain maybe on earnings for a little bit, inflation then comes down and you can sort of grow. Interest rates come down as well, and then you can sort of grow properly as a country rather than sort of having this inflation wage price spiral. But yeah, US jobs data looking relatively strong, basically. Continuing jobless claims sort of not increasing as they were expected, but is still high. And yeah, that was about it for the news. So the Trading212 ISA crossed 200,000. Very nice. Still got a reasonable cash pile there, which I will be sort of withdrawing. So obviously wouldn't actually withdraw it out of the ISA, but I'll maybe sort of move something in here, Broadcom or something, and sort of then draw the cash out of the invest account. But yeah, looking very strong. Fresneo sort of took slight, well, I wouldn't say a hit. It's £14.47. Very happy with that, but yeah, it's down ever so slightly. Riot sort of looking pretty strong, and iron sort of close to the highs it's been at recently, even with sort of Bitcoin pulling back a little bit on Friday. So we'll have to see. Expecting good things from that, and any sort of AI deal they get would just absolutely rocket them up, I presume. But yeah, looking good on the ISA. Interactive Brokers side has sort of barely moved. And yeah, on the option side, as you can see, it is iron that is doing the business for the portfolio, basically. Stock sort of increased a reasonable amount. I think we were at sort of 15, 16 last week, and sort of we had spikes up to 18, but we finished the week at 18, so it is pushing on. Sort of quite tempted to take a bit of profit. I was very tempted to sort of earlier in the week when it really did spike up, but yeah, sort of missed out on that. Hive has sort of come back down a little. I kind of think that needs a big push on Bitcoin to really get going. They don't have any sort of AI side really other than what they're building themselves. So yeah, being a high cost producer, we had Bitcoin difficulty went up as well, so that doesn't help them. But yeah, still think there's potential for them. Coeur Mining and Equinox sort of come down slightly, nothing too much there. Kind of gold having a bit of a rest. IMAX sort of barely moved. Riot has started to come up as well. Don't know whether there's sort of potential, for an AI deal. They've been selling off their stake in Bitfarms, continuing to sell that off, possibly at a poor time, but I guess they're saying they need to raise cash. They would, rather than sort of selling their Bitcoin stash, they would rather sell Bitfarms shares. Not sure if I really agree with that. I still think the miners should do well sort of in the next few months, so they might come to regret that. Already have been, I think, from what they were selling a month ago. And yeah, Cypher sort of Cypher and CleanSpark not really moving a huge amount. I think Cypher's up slightly from last week, but down from the peak a couple of weeks ago. And yeah, cash sort of moves about because it's in dollars, so it's up slightly in pounds, even though I haven't actually deposited anything or sort of made any changes this week. So yeah, it's all very volatile, but interesting to watch. So leave your thoughts in comments below. Let me know how you're getting on, and like and subscribe. See you soon.